Inflation, let's talk about this for a minute because we know that the Fed just lowered interest rates a quarter percentage point. Ooh, that's going to really get us somewhere. But anyways, we know that that just happened this week, and a lot of people are wondering what they should do because inflation is guaranteed to be a problem moving forward. Because if we're lowering interest rates in an environment where inflation is continuing to go up, well, it's almost a certainty at this point that it will continue rising at an unknown rate. And a lot of people wonder when things get this bad if they should maybe take a look at buying real estate. Is this a good way to hedge against inflation? My answer to that is it kind of depends. Well, let's review some things here. One thing we got to look at is what inflation does when you want to build a house. In general, inflation makes building a house more expensive. So in theory, when home builders want to go and build a brand new house, their costs of development are going to be higher when inflation is higher. So naturally, they're going to push those expenses onto the buyers of those brand new construction homes, right? Right? Well, usually, but that's not what's happening right now. Right now, you can actually buy a brand new house for cheaper than an existing home in many parts of the country where brand new homes are available. And when brand new homes are selling at lower prices than existing homes, that tends to bring down the comparable sales of existing homes as well, which means those existing homes are now worth less too. But it is also true that in times of inflation, investors want to have hard assets like stocks, bonds, and real estate, gold and silver, things that have been proven to increase at or even beating the rate of inflation. Now notice how I said investors, because investors purchase investment real estate. And if you are purchasing investment real estate and you are receiving a positive cash flow each month and getting an actual cash on cash return on your investment each month, and simultaneously the value of your property is going up because of inflation, that's a good reason to buy real estate. That's why you hear all those guys like Robert Kiyosaki and Grant Cardone and everybody telling you that you need to invest in real estate and that's how you're going to become rich. However, the problem is the average person doesn't do that. They go out and they buy a residential property, usually close to the maximum of what they can actually afford, what they got approved for, and they live in the house and they say, well, look, I invested in real estate. This is my biggest investment. Hi.
Subscriber.
Oh, really?
Uh-huh.
What's your name?
My name is Sabrina.
Sabrina?
Yeah.
Nice to meet you, Sabrina.
Oh, nice to meet you too.
How are you?
I'm doing pretty good.
Are you working right now?
Yeah, I do Amazon Flex.
Okay,
Yeah,
cool.
nice. I like your when you talk about economy.
Yeah?
Yeah, is what because I'm driving around and it matches everything that you says. It matches with what I have seen when I'm driving around about economy and all that. So I like your opinion about it. I like to follow you.
Oh, I appreciate that.
Yeah.
Thank you.
Yeah, I saw that you were in Marin County once, but I have no idea that you were here again.
Yeah, here I am.
Yeah, nice to meet you.
What's your name?
My name is Sabrina.
Sabrina.
Yeah.
Nice to meet you,
Oh,
Sabrina.
nice to meet you.
Well, I appreciate you watching my channel.
Oh, nice.
Thanks for stopping and say hello.
Oh, thank you.
Okay,
Have a great day.
bye, you too.
Thank you.
Shout out to Sabrina. Well, there you have it, guys. She's there doing Amazon Flex, and she's telling you that everything that I'm talking about here on the videos is something that she's seeing happen in real life, in the real economy, as she's hustling through the neighborhoods delivering people's groceries. So just think about that next time you want to say, well, this isn't happening, that's not happening. Well, are you out there doing this? Are you out there working hard like she is and, delivering things for people and seeing what's really going on? Or are you just, sitting comfortably in front of your sofa watching the Bubble Vision News tell you what's going on? That's what you have to look at. Anyways, back to real estate being a hedge against inflation. What I was saying is that if you're just going to buy a property and live in it and pay the bills, that's not going to be a hedge against inflation for you, okay? If you own the property and you're going to actually, rent it out and create rental income, and you're going to see that property appreciate over the years, then the answer is potentially a yes. However, as somebody who has done this in the real world, I can tell you that it's very possible, especially in this environment, where you can buy a property that's cash flowing, and within just a few years, you might actually have a negative cash flow. And this is why. because everybody thinks that landlords can just raise the rents every time the expenses go up for the property. And while landlords try to do that every time they can, if it's necessary, it's definitely not always possible, because as a landlord, you can only charge what the fair market rents are for the neighborhood. So for example, if you own a house that's being rented out for $2,000 a month and your expenses have gone up substantially, and in order to break even, now you need to raise the rent to $2,300 a month, but the fair market rent in the neighborhood is still only $2,000, and there's other choices out there for your tenant to go and rent a house for $2,000 or maybe even $1,900 or $2,100. What is the reason they're going to pay you $23,000? Unless they really love your house, they're probably not going to. They're going to move. And so, because the expenses of owning a home and being a landlord have gone up so substantially over the past 5 years, you can easily buy a property that's cash flowing and then just a few years later be in a negative cash flow situation. And that was kind of like the future I saw for the investment properties that my wife and I used to own. And we decided to offload them before we were in a negative cash flow situation. And I'm very glad that we did. And we still gained some appreciation along the way. So if you can kind of time it properly like that, like we did, sure, it is a good hedge against inflation. You can make investment income along the way, and you get appreciation income, assuming you sell at the right time. But this is not even close to the same thing that most people do, which is that they go out, they get pre-approved for $250,000, and then the house of their dreams costs $275,000, and they find a way to get into that house and go above what they can really afford, and then the expenses of that house continue to go up, and they just can't hack it anymore. Is that a good investment? Is that a hedge against inflation? Not really. You just bought yourself a ticket to ever increasing inflation, because every time inflation goes up, so does your homeowner's insurance. So does your cost to repair anything on the house. So do your utility bills. Basically everything except for your principal and interest payment, assuming that is fixed, is going to be going up on that home in times of high inflation. So to answer the question, is buying a house a good hedge against inflation? Only if it's a good investment, meaning that it cash flows today and it's likely to cash flow at least into the next 3 to 5 years, and the value of that property is also going up. Because even if it's cash flowing and you buy in a neighborhood where the values are going down, well, it's not going to be a good hedge against inflation. You are essentially going to be losing money on that investment when you factor everything in. The only thing I will say is that the long-term comparisons kind of math out in favor of homeowners when you just look at mortgage payments versus rents, meaning that over a 30-year time frame, if you were to buy a house versus rent, then there's a good chance that you could come out ahead, because your mortgage payments will remain more stable versus the average annual increase in rent, which is about 4.2%, even though right now rents have been coming down. But over a 30-year time frame, historically, that's what it's been. So when you look at it through that lens, sure, maybe owning a home over 30 years will be a better bet than renting. However, they're not taking into consideration an increase in property taxes. They're not taking into consideration any maintenance costs that you're going to have on the home and how inflation is going to affect that. And they're also not taking into consideration the fact that most people don't own a house for 30 years anymore. And every time you sell or refinance or whatever it is that you do, and you don't keep the home for 30 years, that's working against this type of math.